Hey everyone, how are you? Rick here with Hit and Run Candlesticks, and this is Sunday, January 31, 2021. My goodness, it's almost February, a month gone out of the year. Hey, I've got some weekend charts that I want to go over for you. First, we'll take a look at the We'll take a look at the SPY. We're going to look at VXX. We're going to look at FNGU. Then we'll take a look at some charts here. One of the things I'm focusing on this video is blue ice failures or near blue ice failures. Okay. In fact, if you check your emails here in a bit, I'm sending out an email with 67 tickers that qualifies or near qualification of a blue ice failure. And then I've got, I think, 9 trades we're going to put on the video here. So anyway, check your email. If you do not receive the email, that means you might not be on our database. If you're in the database, you'll receive the email. And hey, I want to remind everybody that if you like the videos, please check out that subscribe button. Click on that subscribe button. Subscribe to our YouTube channel here, and I appreciate everybody that does that. And thank you so much for watching our videos. Thanks for your support. Okay, let's take a look here. Okay, so on the SPY, we've had a few days not so good on the SPY. I know for some traders, kind of troubled waters. A little bit of a problem this past week here. We've gapped down. We tried to move back up and we failed. We ended up here with something I'm going to call a doji continuation pattern to the downside. This also would qualify for one of our what we call an Oreo cookie. Now, it's not a perfect Oreo cookie, but the scan I use is a little bit not real tight. And it would qualify for that. So we could be setting up here for a serious blue ice failure, and what might happen is a relief rally. We could certainly see a relief rally, and then a failure to the downside right in here. Just based on the simple chart closing this past Friday, price is below the T-line. Price is also below the Trendicator, and the Trendicator has now turned red, 3 bars now. See that red dot here, those 3 dots. We've gone from green to red, so that's going to have to put me in a bit more of a bearish attitude, which I have not been in for quite some time. But I'm going to have to go that way until that changes. So until that Trendicator turns green, I will remain bearish from this point here. So, all right, there's a SPY. Let's take a look at FNGU. There's FNGU. FNGU has also turned red here. You can see the green dots. That's all bullish. That remains in our bullish trend. And when the trend is broken, then that's when we're going to get cautious or even bearish. Now that we have a red dot there, we're going to look at that as a bearish move. Now, that does not mean that the bulls cannot come in here and rally us up, but what they're going to need to do is continue that rally. So if they can't hold it up and we start moving back, that'll just add, you know, another red dot in there, another red dot, and that would push us back down. We've got the 50-period moving average right here, so there's a good chance this comes down just to test it, just because we're close. Another chart I want to look at is VXX. Now, in the trading room last week for these 3 days right here, I was talking about VXX pretty heavily, and that it's starting to show a little bit of strength here. And if it closed up, I think the first number I had was 1875. If we closed over 1875, we should be a little concerned. Well, we closed well more than 1875, and we've come back and tested now, and it looks like we're trying to move up. So here's the thing with VXX. Now, it has certainly done this in the past. It has clearly done it in the past here. Right here, right here, all through here it's done it. Where we pierced that 50 period moving average, which is that blue line. We've pierced that, but then what has happened is the buyers came back in, or the fear started running out of the market and pushed us all the way back down. So what makes this different? The truth is, it's kind of hard to say if it's any big difference, other than the SPY has pulled back. Let's come over here. The SPY has pulled back into the 50 period moving average, where back here it did not. The diamonds, here's the diamonds. The diamonds have now closed below that 50, and we've got that Trendicator turning red here. Take a look at the transports. Let me get rid of that. There you go. Take a look at the transport. That's just not looking very healthy. Now, we are at a point where we've been down enough, we could see that relief rally. But if the relief rally goes nowhere and we just find some selling on a relief rally, if that happens, and we start seeing that climb down, we get below that Friday's low here, man, that puts us in some territory that, well, it just might jam up a few people. So we want to be a little careful out there. Be very careful. We're also in earnings. This is going to be a heavy week of earnings, so be very cautious with that. I want to remind everybody that you do not have to trade every single day or every single week out of a year. So do keep that in mind. We lightened up a bunch this Friday, and we'll pick it up Monday on what the market ends up doing. All right, let's take a look at some trade ideas here, and they are all going to be on the short side today. And then I want to remind you again that if you are on the Hit Run Candlestick database, Hit Run Candlestick or Right Way Options database, then check your email. We are going to send out an email with 67 possible charts that look similar to the charts that we're going to take a peek at, such as LEVI, XLB, SQ, ADM, LYFT, XLF, Bank of America, MGM, UAA, and we're going to cover those charts right here on this video. So thanks again for watching, and let's head into them. So what I've got on LEVI here, earnings and not till April, so that's good. We've popped up, put a little weakness in over here, back down. This could have been a good bullish trade up, but then we ended up failing, and we failed to make another high. And in here we've plowed right through that 50 period moving average. The T-line has now pierced the Trendicator. Price is below the Trendicator. Trendicator has turned red. We've got a buy box here with a stop around $21. So here's what we're going to do. And again, I just want to remind everybody, this is just me thinking out loud, setting up my trade plans, and I'm just doing it via video here and posting it on YouTube. Please always remember, if you take a trade, always have your stop in, always have protection on, plan your trade. That's very important that you do that. And you get 100 traders together, they could trade totally different, but yet all make money. And it's all because they have a plan. So have that plan on board. So what we're going to do here is we'll look for an entry. In a perfect world, I guess something I would like to see actually is a rally up, and then I would like to see failure, and then we'll look at that entry in here. Now that doesn't mean we're going to enter up here, doesn't mean that we're going to wait for here, doesn't mean we're going to wait for a breakdown. I can't predict that until we get to trading. I'm not in the business of putting ideas out there, hey, if it does this. Honestly, if it's inside this area here, that's what I'm going to look for a trade. I allow live trading alerts to tell me what the charts are doing, though that is what gives me the alerts to maybe, to go look at the trade, and then I'll decide if I like the chart well enough to buy it. So anyway, we'll look for a buy in this area, and of course, depending on where we buy it, we will adjust our stop accordingly. So $21 might not be the stop depending on where we buy it. And then we'll look at taking profits to the downside. Now, one thing I'm going to do here, I just realized that I'm going to go to a different chart. I'm going to use my rounded bottom breakout chart because it has the 200 period moving average on it. There we go. And that's the 200 period moving average. This is our dotted deuce right here, what we call the dotted deuce, and of course the 50 simple Trendicator, T-line, and price. We're going to use that because when I look at these charts like this, when I'm looking at a blue ice failure, I'm always looking for the direction for price to go is down toward that 200 period moving average. Here's XLB. There's XLB. So here we've been in a nice bullish trend. We've pulled back. Price has now broken down through the Trendicator. The Trendicator has turned green or red for several bars. We're below the 50 period moving average right here. We rallied up and we failed the 50 period moving average, and then we had follow through. So there's the blue ice failure setup. So we'll look for a buy somewhere in this buy box here. We'll use stop approximately 72.80, 85 there, depending exactly where we buy it. And then we'll look for price to move down toward the 200 period moving average down here. Certainly not going to do it one day. That's not at all the case. We never expect that. I would expect some sort of relief rally to pop up somewhere along the way and then move down. When it's all said and done, with everything shakes out, what we're going to do is we're going to follow the trend. So if that relief rally, wherever it starts, say that relief rally, if it was to break out over that trend and then come back and test with some follow through, that would take the short trade clean off the table, and we might even look at something toward the long side. So everything we're going to look at is based on the trend. What is the trend doing? Square may be setting up. Square's put in a little bit of a toppy chart pattern here. Sellers have taken control. Price is now below the Trendicator. T-line's below the Trendicator. We've fallen below the 50 period moving average, and we've actually tested and came back above it. The way I'm looking at this chart, if it cannot get back above that 226.45 area, then I would like to short it in this area for some follow through. If that was to happen, we would have here what you call a bearish H pattern, dreaded bearish H pattern, I think is what they call it, like this down here, and not really an H till we come back through this low. But you can see how that H might be forming up, and maybe somewhere in this area we might get an entry. Of course, again with that, what are we going to do? We're going to follow that trend. So if price was to actually break out of that trend and set up, we could see a bullish move up. Crazy market right now. ADM is another one. This is a good Oreo cookie type setup where, just like the Oreo cookie, you've got the chocolate cookie shell on the outside, and the sweet cream filling in the middle right there. That's exactly what it is. Let's look at this downtrend here. Downtrend moving down, something like that's what I'm going to look at. Maybe we'll move this down a little. There we go. Buy box right in here. If we come back up through that 5170 or show a strong move over this downtrend line over the next week or so over here, then that short trade might not be in play. If we do short this, then what we'll do is adjust the stop according to where we shorted it at. and also with a little consideration to market condition. LYFT is setting up. Rounded, kind of toppy. We also have a little, we could look at this and might want to call that a little bearish M pattern up here. And here we had that follow through. Price below the Trendicator, T-lines below the Trendicator, price is below the Trendicator, and we're running down below the 50 period moving average down there with a failure of the 50, back up for testing, and it failed so far. So we're looking for an entry in this area here. Back up through 47 and a quarter, that actually might be a bullish trade. So if the bulls can pull it up there, we might even reverse and get in this bullish. If we do buy it, of course, we will adjust the stop accordingly. And then, as I mentioned, whenever I'm looking at a blue ice failure, I'm always looking for the 200 as the target direction. XLF may be setting up. Rounded top, everything here is looking to the downside. We've got a negative day. We tried to push up here, ended up with a little evening star below the T-line and the Trendicator, closing back down through that 50 period moving average. This would make an awful nice entry inside this area right there. A stop 29.90, something like that. Of course, we will adjust that stop based on where it's bought, if it is bought. Bank of America might be setting up. I think Wells Fargo is also set up. There's a few other banks. And I think on our list of 67, there's a couple more banks on there too that's set up. I just put Bank of America up here because I just like the 3-bar pattern setting up. That evening star setup. Again, everything is below the Trendicator. Trendicator has turned red. Blue ice failure setup, and the target direction is down here toward the 200 period moving average. MGM, and there's a couple other casino type charts that are also set up pretty well here. Now in MGM, clearly we have a top up here. We've moved past the Trendicator, turning it red, and the T-line below it, but now the T-line is actually down through the 50 period moving average right there. So I'm going to be watching that one pretty close. We're going to shop for that entry in here. Look for that to just explode to the downside, and we'll profit toward that 200 period moving average. Above $30 and a nickel, that might suggest that the buyers are trying to come back in. But even if it does, if we see a sell signal up here, we just might take that short as well. And then, of course, wherever we buy it, we will we'll adjust our stop accordingly. UAA, this is the last one, so I want to thank everybody for hanging around with us here. I appreciate you watching the video to the end. Remember to check your email. If you are on our email database, you should receive an email. If you've opted out, and you're just listening to videos, well, then of course you're not going to receive that email. But it has 67 charts on it that are very, very similar to the type of charts that we looked at here on this video. So, and don't forget to subscribe. Okay, thanks a lot. All right, let's talk about this one. UAA has popped up, put in a nasty little candle. And all that really tells us is we're going to have a little bit of a pullback, and we did. Buyers came back in. This is the problem candle here, the problem candle that we failed to make a new high, followed by a big old gap to the downside. That kind of smarted. I think that might have changed the game on UAA. If we close back up through about 1815, 1820, well, maybe the game is back on with the bulls. But until then, I'm going to look at this as a bearish trade. We'll look for an entry inside this green box here, and then we'll look for price to travel down toward, not to, toward the 200 period moving average. And as always, we will look to take profits on the way down. Alrighty. I want to thank everybody for watching this video. I appreciate it very, very much, and I hope to see you all in the trading room tomorrow. Thanks from Hit and Run Candlesticks and Right Way Options. Appreciate it. You guys take care.